The most important earnings season of 2023 is just beginning. Hello, ladies and gentlemen, and welcome back to the Daily Show where we talk about markets around the world. In less than 24 hours, we'll see the big banks start to report, and this kicks off a sentiment that runs over the next 2 to 3 weeks and sometimes can really drive into the next 2 to 3 months. Today, we take a look at 100 years of data of stock markets to find out what tends to happen next. We'll also be talking about yields. They've fallen off a cliff as we saw inflation moderate back in June. And realistically, this has led to markets across the world hitting into critical new breakouts. Yes, they've been on a run that some people would call crazy and insane. We'll be taking a look at that and more in today's video. So join us as we cover stocks, commodities, and cryptos. Well, welcome back everyone to the Daily Show where we discuss macro lead indicators and the hottest charts. Here's a heat map of the last 24 hours, and I think it's pretty clear to say that Nvidia, Google, Amazon, Tesla, and realistically anything in the software world was leading. Hyper stocks have been all the rage recently. We've talked about PayPal, Zoom, and many others on the show, but the last 24 hours was Coinbase and, of course, anything to do with crypto. Ripple Labs' long-standing legal victory finally came through. 2 years plus, I believe this has been going for, and it sent that particular coin into the stratosphere along with, of course, all the other cryptos and especially crypto stocks. But let's talk about stock markets in more generality. We come into the biggest earnings season, and if we take 25 years of data and we break that down to presidential, pre-presidential year cycles, we get 7 years of data that looks ridiculously similar to what we've seen so far this year. When does the turn come? It's usually over the next 1 to 2 weeks. So we'll be looking very intently at the forward guidance of all those companies moving forward. When we go back and we look even further, back about 60-ish years, 50 to 60-ish years, we'll get even more information of what tends to happen next. When we look at the NASDAQ and we say, well, it's had a great year so far, and of course, a great start to the second half of the year, what tends to happen in Q3, Q4, and the second half in general. Q3 always seems to be the struggle time, and that's the one that's put in the most amount of uncertainty. So as we approach these key resistance levels, we'll want to be looking for the signs. Of course, we have seen absolutely none just yet. Let's now talk about options as we lead into, of course, rotations in the market. And the first thing to say is there was a lot of unusual 90-day plus average volume trading. Take a look at some of these big ones. Coinbase got a 24.5% boom in it thanks to the Ripple news, and that's a pretty big move. And then, of course, we had some of the other ones as well that had been coming out. PayPal, Zoom, they were some of the ones with some unusual volume on them, and you can see on this chart there's a whole bunch. Realistically, at the moment, it's anything like the back end of 2020 to 2021, those hyper stocks that are getting most of the interest from retail and also from the options world. We also have 61% calls, same type of trend that we've seen for a month and a half now. Mostly calls, less puts, and bigger than usual volumes. But when we break down some of the stocks that we're looking at very, very soon, you'll see that there is some unusual volume starting to appear on a couple of the bigger positions. We'll be covering that, I think, more through Friday and earnings season, so stick around. That's going to be a very important point for these markets. So let's talk about rotation. What's going on in rotation? Gold has been the best performer over the last 5 days, and it looks like the shiny metal could be back, especially if yields continue to drop off. Definitely a sleeper, super underpriced compared to many other sections in the market. And what it shows you is there's going to be opportunity in so many sectors moving forward. Utilities, staples, and healthcare. These ones are usually the defensive markets. They have not shown any signs of extreme strength except for utilities over the last couple of days. But still, we need all three generally running for 2 to 3 days to show us that Wall Street and the bigger traders have moved defensive. That didn't happen over the last 24 hours. Gold having another good session. Technology, semiconductors, communications, all realistically anything that's been running in most of 2023 was still running hot. But let's jump over to the charts and talk about things that are running hot. Now, a lot of people have been mentioning RK recently because they've seen the resurgence of hyper stocks. This is kind of like the pseudo index for those types of things. And we've had a huge movement out in recent days for this particular market. Now, interestingly, it's read a TD9 on the weekly, you can see here, so it's already been in a bit of a run for a while, but this is a fairly significant breakout, which could be met by a little pullback as it approaches into these zones and then maybe a resurgence from that point. Certainly an interesting base here for ARK and all hyper stocks across the board. But why am I bringing this up? Well, it has to do more with unusual volume activity. We saw one of the biggest trades ever to go through over the last couple of years for ARK over the last 24 hours. Now, that could be a buy, solidifying, further runs, or it could be a sell of some profits coming through here. The action that happens on ARK and on some of the hyper stocks over the next 48 hours will really dictate what this particular trade was. Was it a huge buy or is it a bigger sell? We want to be keeping our eyes peeled on the smaller timeframes. The same thing goes for Tesla. It's actually struggled in recent days in comparison to some of the other bits of the market. It had a great run, it's sitting, and it continues to consolidate around this area. But I'm interested in the entirety of the consolidation. If you've been watching the channel for a while, I've kind of been very iffy on this level in particular. And while 300 is still technically where the bulls should be pushing it, if we look at some of the turn points that we see recently, you wouldn't have made necessarily the worst mistake to think that around this level here was actually potentially where the bears were ready for sells on Tesla. Now, let's take a look at the actual trade volume. It's massive. Is this a distribution event or a really big accumulation event? I'm still thinking it could be distribution. We saw dark pool activity in the last 24 hours on Tesla. And while we have absolutely no physical proof as in the technical analysis just yet outside of unusual volumes, there is so much trade going on through Tesla at these highs. Some of the biggest reads we've ever seen the last couple of years, and they're all happening in a concentrated space. Certainly very interesting. In Meta's case, when we saw something like that, we actually still got an incredible boom. So it doesn't mean instantly that there's a bear bust coming, but there's certainly a ton of larger player trades. And I think that's interesting. Should we see price action go in a certain direction? Let's talk about US 2-year yields. They continue to look like they're weakening. As long as these keep weakening, things like gold should be doing relatively well. We'll also probably see the stock market have an okay time. Remember, it's the fear of the unknown that stock markets hate. If this switched and started to ramp back up for whatever reason, always have an alert above here. It's the fear of the unknown markets hate, and it's something that we should be keeping in our back of our mind. We also know that we need to be watching now, like a hawk, US 2-year versus US 10Y. Everyone uses this as a bit of a read on whether we're going into a recession. Remember, this just shows a sickness in the economy. If markets actually go underneath 1%, that's usually when you actually see a recession. So it's actually when we go out of the horror zone, and then we can count back how long we stayed above. And that's something for another day in another video. Let's now talk about gold. It was a decent performer over the last 24 hours. I would expect gold to have a pullback at some point very soon to allow kind of the more patient traders to get in, but it looks like a good base, and there's a lot of things heating up for gold. I will get the latest data from people that are placing huge positions, and we'll see whether they've switched bullish after being bearish now for literally months, because I have a suspicion they may have, and we'll be following that story. Magma, one of our kind of indicators on whether the market really is weakening or not. Another strong day, 3 days in a row. And interestingly, it's kind of like almost a waterfall style action here where you're getting kind of like a ramp of very similar style candles. It's not bigger and bigger and bigger, which is something I'm usually looking for a waterfall, but certainly a gap up, very strong on Magma. It's coming to a key level, but not really for this particular market. So you can see here that we're just seeing super strength. There's no sign of weakness just yet, but we do have those 3 breakaway gap up days. The equal weighted market still looks pretty strong. This is showing us that we're getting some rotation into breadth, which is of course, a decent strength indicator. And high yield bonds have completely snapped off that weakness, going strength again over the last couple of days. And another beneficiary of that has been treasuries. Have we seen the low in treasuries? Well, again, there are other opportunities in the market. All things giving equal, treasuries are damn low still. So when we see those yields go down, if that continues and treasuries break through 104 moving forward, it could be that we are now in a sustained treasury trend that could go on for maybe the next couple of years. Yeah, I said that. It can be quite a while, especially if the Fed is fully pivoting soon and the markets are starting to pick up on that. Some super interesting stuff here going on treasuries. Let's talk about the VIX. When will we actually ever see the VIX go up again? This is a question everyone's asking us. Well, the answer is quite simple. We usually see the VIX fill all gaps. I think the stat record is it's filled all gaps throughout history. 12.12 is interestingly a gap that was left from 2020. So will we need to see the VIX go back to a 12.12, or is it going to spike high over the next 2 to 3 months? Historically, this has been the second biggest VIX increases of the year. We'll show you that in a chart on our weekend videos, and you'll see quite a lot about how the VIX tends to mark. It's Q1, usually Feb to March, and then of course we've got that Q3, which is generally around this point, next week pretty much, into the August-September period, with October being usually a very, very good month. Will it hold true? So far, it's been pretty similar to that, as we saw in the start of this video. The skew didn't get crushed, nothing more to repeat there, so we've talked about that plenty of times. And we got a TD13 on the Qs as we've ramped with multiple gap ups. There are so many. If I add all of these now, there are so many gap fills that haven't been filled. People will be losing their minds on this, and I don't blame you. I mean, look how many gaps have been left. And this is probably not all of them, actually. It's like 1, 2, 3, 4, there's 10 gaps or something. I don't think I've ever seen so many gaps on the Qs ever in my trading career. This is the most, but that doesn't mean that the markets need to come down. As you know, they can stay irrational longer than you can remain solvent. But we did get a triple Q TD13, and of course, central bank liquidity remains incredibly lackluster, other than the shadow liquidity behind. Traditional metrics certainly not supporting this market move, but it is happening. Now, we talked about the weakness that we saw in the dollar, and I said that parity would get smashed, and it did. It got destroyed. Parity's 100 to other currencies. Of course, this is the dollar index, and it just blew through it. We are coming in now to an extreme zone. This entire box is an extreme zone, and I'd expect us to hit somewhere in the middling of this area. So, look, dollar is super extended away. The short has been real, and I wouldn't be surprised at all to get a bounce moving forward soon. Bounce traders will be looking, and they will be paying attention to the small timeframes. And I expect currencies to have some excellent trades on them over the next 2 to 3 weeks. It's all happening, and if you're being short in dollar, it's probably still not even on the take profit targets just yet, but my goodness, it's on an extreme run down. That's been good for gold. It's moved into the heavily traded zone. I do think this is where gold should start to have a little bit of a problem, pull back, and then ideally find buyers in. And especially if we get the data that supports that a big player has entered gold here, which we can suspect has happened, pullback should be met by buy demand, and that's been something we're looking at very closely. We do like our gold on this channel when it gets hot. Oil has almost completed. Now, contrary to popular belief, oil does not like yields dropping. So if that continues to be the storyline, while oil comes up to our most traded zone around 77.60, I'm not so sure I'm so bullish on it anymore. Very nice run. We talked about it. If you've been bullish on oil over the last week or two or even couple of days, congrats to you. Well done. But it is coming into a zone where I'm very ultra cautious. This area for oil is no joke. The breakout is real, but really I think the breakout statistics were higher yields, which was happening. It's not anymore. OPEC, of course, which is reducing barrels. Sure, that's there. And now, of course, you could also argue, well, the dollar fall off is helping oil go up as well. That's absolutely true. But as we saw, the dollar is about to enter into a zone where you would expect buyers to show some commitment towards it after such a big sell-off. Let's continue to move through some of the markets now, and we'll go over to the Australian market. We reported that this may not hit 69.50 just the other day. We saw that tweezer, we saw the reverse, and it just keeps ramping up. Yeah, unfortunately, I think the short is over for now. And this is historically, where you get those little bits of a turn for the ASX market. We did speak about it. I don't think, though I don't know, whether it's going to continue to actually go short at any point just yet soon. It really depends on the US market overall. But of course, where are the sellers? They're going to be up here in the top end of this range, 73.50, 7400. But yeah, 69.50, not quite hit. We ended up getting down to around 7,000. And then we found those two tweezers and we reversed on the smaller timeframes as we reported. So yeah, things change pretty quick in this market and you've got to be on top of them very much so. We've been negative for months here, but things changed pretty much about 3-4 days ago. Let's move over to the German 40. Now this one here, we have talked about it being a Wyckoff distribution. I'm going to stick with that being at least the analysis so far. Of course, the low was taken, which usually can be that, if it keeps going, it's going to be a super slingshot into a super aggressive move. But in traditional terms, somewhere in here is usually where you see the weakness. I said in the last 24 hours, and I said to the private community, if you're interested, 7-day trial and links down below, that we're probably going to wait a little bit here and look for some type of small time frame change or trend in this area. We still haven't seen one. So as we dial in on the 15 minutes, there's nothing there. Let's have a look at the last 24 hours though. Did we get anything? Well, the answer is simply no. We still haven't seen one change of trend. It's just been making higher highs and higher lows. And now we have the higher high, we have the high, we have the low, and we're looking for that kind of level to be broken through to at least get any signal of weakness on the small time frames. It's hard to be short in a market that's so aggressive. It still is technically in the correct zones, and we've got here the 16,080 kind of zone. We need to see that broken through to the lows to show that the DAX is actually weakening. US 30, very lackluster. I mean, we are seeing that the Dow does not want to come and play ball game with the rest of the market. Look at it sit here in the supply. So the Dow has been absolutely boring. Meanwhile, the NASDAQ's getting wild and it's coming into, it's actually hit our zone before the S&P 500 has. So we kind of thought 45, 30, 40 for the NASDAQ, for the S&P, and the NASDAQ just came straight in. Very aggressive market, straight up into this zone. Do we have any signs of weakness yet? We'll go to the 3-minute chart, just have a look. The answer is not really. Again, it's shown that it's hit this area and seen some sell-off, but nothing substantial yet. So it's still bullish until proven otherwise. When we move over to the US 500, we can see that we haven't quite gotten to that 45.40, 45.30 zone. We're looking towards that. There's no real signs of significant weakness here in most of these markets. So they're kind of looking still fairly bullish, but earnings may sort that out. So be careful here. We'll go into the 15-minute timeframes. Where would we see some weakness? It's even hard because the structure looks so terrible. Like basically we don't have any demand levels all the way through here. We've just seen buy, but we don't have anything significant to show us a change of trend. Maybe if we keep consolidating around here, take a new high, then take a new low, that could be, a potential day traders kind of setup. But yeah, at this stage, the trend is still up. It's still on a ramp, and there's not much you can really do about that unless you're in the long, which you're feeling pretty good about. Let's move over to Bitcoin. Now, this is interesting. The daily was really annoying. Look at the daily. It closes right on our watch reaction here level. Technically, the daily has broken out. I'll wait for the weekly as well because that will be significant. But we've talked about crypto before. It's going to have a sympathy rally for the NASDAQ if the NASDAQ keeps flying high. So if we keep seeing markets go through on Friday very strong into next week, for Bitcoin maximalists or people that really like Bitcoin, it could be on. And if it is on, it could be on for like $10,000. So there is a significant lack of resistance on the left-hand side of these charts. So if this thing really turns and it decides to put a nice weekly close in as well, ooh, where could it go? I mean, I've talked about like 40s, 44, 46. It's even possible. Big ramp ups here as Bitcoin comes back in. I really like Bitcoin over the next 6 months into that, well, actually a bit more than 6 months, 9 months into the halving cycle. Traditionally, Bitcoin is done actually lackluster. So it's kind of done this. And then it's gone up and then it's gone down once and then ramped really heavily. But it's all about to start again. So will we see a cyclical repeat like we've had in the past? Join us on the show as we cover that moving forward. When we scroll through the news, there's nothing much else to go through except for prelim UOM consumer sentiment. And we've got that coming out, of course, on the Friday, 10 a.m. But it's all about banks. How will they report? What is in the future, according to them, for the markets? Thanks so much for watching. Subscribe, smash that like button. We'll see you in the next one. Bye for now.